Please make sure you read the disclaimer first. This video is for educational and entertainment purposes only, not financial advice. The crypto market is highly volatile, and every decision you make should be based on your own research and risk tolerance. Now let me ask you something important. Have you noticed how every time XRP starts to move, the entire market suddenly wakes up? Well, it's happening again. XRP is back in the spotlight, and once again, the price action is forcing everyone to pay attention. This is one of those moments where emotions run high, headlines turn bullish, and social media starts screaming breakout. But the real question is simple. Is this a real move, or is the market setting another trap? Hello, beautiful people, and welcome back to We Are Cosmic. If you are new here, my name is Syed Ali, and on this channel, we talk about finance, crypto, and market psychology from a realistic, experience-based perspective. No blind hype, no fake insider promises, just calm analysis, real data, and honest discussion. If that sounds like something you value, you are in the right place. Right now, XRP is trading around the 199 level, slightly down on the day. Just hours earlier, we saw XRP pushing above the $2 mark, even flirting with higher levels before the broader crypto market pulled back. This kind of price behavior confuses a lot of people. One moment, everything looks perfect, and the next moment, we see red candles. But this is not chaos. This is how markets work, especially crypto markets. Many traders went to sleep thinking a breakout was confirmed. Some woke up disappointed. This emotional cycle happens again and again in crypto. And if you don't understand it, the market will punish you. That is exactly why today's discussion is important. We are not just looking at price. We are looking at why the price is moving and what might come next. Over the last 24 hours, most assets were green. But if we zoom out slightly and look at global market timing, especially from the GMT perspective, we can see that many assets have slipped back into red territory. Ethereum is still trying to hold key levels. Solana has cooled off. The excitement from last night has faded a bit, and that is completely normal. This is the part of the cycle where smart money becomes cautious and emotional money becomes confused. Some people panic sell, others chase green candles. Experienced investors step back and observe. On We Are Cosmic, we focus on observation, not emotion. Before we go deeper, I want to take a moment to appreciate you. The support on the morning videos has been incredible. Over 1,000 likes consistently tells me one thing: you value thoughtful crypto content. If you find value in this video, take 1 second to smash the like button. It helps the channel more than you might think and pushes this content to people who actually want to learn, not gamble. In today's video, we are going to break down several key things. We will talk about XRP's recent price action, what technical levels truly matter, and why this move should be approached with both optimism and caution. We will also discuss an important development coming from the SEC, shifts in regulation, liquidity flows in the broader market, and why meme coins suddenly exploded. On one side, you have buyers who feel confident and think the breakout is finally here. On the other side, you have sellers who were waiting for liquidity above key levels. This battle is exactly what we saw play out. XRP pushed higher, touched the area around $2.05, and then pulled back. That pullback does not automatically mean weakness. It means the market is testing conviction. One positive sign is that XRP finally managed to close a daily candle above the 13-day EMA. This might sound technical, but let me explain it simply. For over a month, XRP kept trying to close above this moving average and kept failing. Every time it went above it, sellers pushed the price back down. When a market finally closes above a level it kept rejecting, it shows a shift in short-term momentum. However, and this is very important, the job is not finished. XRP also interacted with the 4850 EMA zone, which is a much stronger resistance area. We saw price touch that zone and then sell off. This tells us that sellers are still active there. For this move to become something bigger, XRP needs to consistently close daily candles above that 50 EMA. One candle is not enough. 2 or 3 strong closes would change the conversation completely. This is where patience matters. Many traders see one green candle and assume the next move is guaranteed. That mindset is dangerous. In the past, XRP and the broader crypto market have shown us multiple examples where we had 2 good days followed by a sharp sell-off. The chart does not lie. History repeats because human behavior repeats. Technically speaking, XRP looks better than it did a few weeks ago. The trend break is real. Momentum has improved, but improvement does not mean confirmation. A real breakout is something that holds, not something that flashes for a few hours and disappears. Another thing to understand is timing. We are currently dealing with low liquidity conditions, especially around weekends and holidays. Low liquidity means price can move faster, but it also means moves are less reliable. This is when fake breakouts happen most often. Big players know retail traders are emotional and they use these moments to shake people out of positions. So what are we watching now? Simple. We are watching whether XRP can hold above the previous resistance zones and turn them into support. If price keeps dipping and bouncing higher, that's constructive. If price starts closing back below key moving averages, then the breakout narrative weakens. It's also important to zoom out and understand context. XRP flipping BNB to become the third largest cryptocurrency by market cap is not meaningless. It shows strong interest in capital rotation. But market cap rankings alone should never be your trading strategy. They are confirmation tools, not entry signals. This is why I keep repeating the same message. Be cautious, not fearful. There is a big difference. Caution means you wait for confirmation. Fear means you panic. Greed means you chase. The market rewards patience and discipline far more than excitement. As of now, XRP is in a decision zone. The chart is telling us, I might go higher, but I need proof. Until that proof shows up, risk management is everything. Over-leveraging at these levels is how traders get wiped out. We've seen it too many times. Over the past week, something very interesting happened. Gold and silver pumped first, then they pulled back. Shortly after that, Bitcoin jumped around 6%, while gold dropped roughly 4.5%. This kind of behavior is not random. Historically, we have seen this pattern before. When gold reaches a local top and starts to cool off, capital often looks for the next place to go. In recent cycles, that next destination has frequently been Bitcoin, and then later, altcoins like XRP. The last time Bitcoin went into a strong parabolic move, it happened after gold had already peaked. That's why many analysts are now watching the gold levels very closely. If the recent gold highs end up being a temporary top, it increases the probability that money is rotating into risk-on assets, including crypto. This matters for XRP because XRP usually does not lead the market. It tends to move after Bitcoin confirms strength. When Bitcoin shows stability or momentum, liquidity starts flowing into large-cap altcoins. XRP is one of the biggest beneficiaries when that rotation happens. However, there is another layer to this story: liquidity injections. Around the year-end, banks reportedly tapped almost $74.6 billion from the Federal Reserve's repo facility. When liquidity enters the system, it doesn't always stay in one place. Some of it flows into equities, some into bonds, and some into speculative assets like crypto. This helps explain why we suddenly saw aggressive moves, not just in crypto, but also in certain stocks. Some stocks that had been beaten down since October suddenly jumped 20-30% in a single day. At the same time, stocks that were already strong did not move much. This is classic liquidity behavior. Money goes where it can move fastest, not where it is safest. We also saw meme coins like Pepe explode, gaining more than 40% in just 2 days, with even higher spikes intraday. When meme coins start moving aggressively, it usually tells us one thing: risk appetite is rising. But rising risk appetite does not mean sustainability. In fact, extreme meme coin moves often happen near short-term tops, not long-term bottoms. This is why I am personally cautious right now. Liquidity-driven pumps can reverse quickly once that liquidity dries up or rotates again. Many people confuse liquidity with fundamentals. Liquidity can lift prices temporarily, but only real demand can hold them there. Another important factor is timing. This move happened during a period of low market participation. Fewer players mean less resistance, which allows prices to move faster, but also makes those moves less reliable. This is why breakouts during low liquidity periods should always be treated carefully. Now, let's connect this back to XRP. XRP breaking above key levels during a liquidity-driven move is encouraging, but it does not guarantee follow-through. If Bitcoin holds its gains and continues trending upward, XRP has a much higher chance of continuation. If Bitcoin pulls back sharply, XRP will almost certainly follow. This is also why chasing price after big green candles is dangerous. By the time retail traders feel confident, smart money is already thinking about exits or hedges. The goal is not to predict the exact top or bottom, but to understand where we are in the cycle. Caroline Crenshaw, a commissioner who was widely considered anti-Bitcoin and anti-crypto, officially left the SEC as her term expired. She was vocal about opposing spot Bitcoin ETFs and often took a strict stance against crypto-related products. With her departure, the SEC now has fewer internal voices opposing crypto. This doesn't mean the SEC is automatically bullish on everything crypto, but it changes the balance of power. Fewer anti-crypto voices usually mean fewer regulatory roadblocks in the short term, which markets generally interpret positively. Why does this matter for XRP specifically? Well, XRP has been under regulatory scrutiny for years, particularly due to the SEC's lawsuit regarding its classification as a security. Market participants often hesitate to commit large capital to XRP until regulatory clarity is improving. With the departure of one of the SEC's most critical voices, the perception of reduced regulatory risk is rising. That's why you may have noticed renewed interest in XRP and a boost in its price. However, it's essential to understand what this actually means. The SEC still exists, enforcement still exists, and regulations are still being written. Just because one commissioner leaves does not guarantee a smooth path. What it does mean is that the market's fear factor may decrease, at least temporarily, and liquidity may flow into assets like XRP that have historically been constrained by uncertainty. Another interesting angle is the political alignment of the remaining SEC leadership. While I won't dive too deeply into politics, the general observation is that regulatory philosophy can shift based on who is in key positions. Crypto-friendly leadership tends to favor innovation, tokenized assets, and smoother market approvals. This can help projects like XRP gain legitimacy in the eyes of institutions, which in turn can lead to bigger inflows. It's also worth noting that regulation is not a guarantee of price movement, but it shapes investor psychology. When legal uncertainty decreases, capital moves faster. This is especially true for institutions that must comply with strict regulations. If XRP becomes perceived as safe in regulatory terms, it could attract new buyers that were previously hesitant. Now let's connect this back to what we've seen recently. XRP's breakout above $2 and the positive technical signals we discussed earlier are occurring against this backdrop of regulatory improvement. This combination of technical and fundamental catalysts is why XRP is drawing attention now. Traders are excited, but the smart approach is to wait for confirmation rather than chase FOMO. At the same time, macro realities still matter. The U.S. national debt is rising, liquidity conditions fluctuate, and global tensions can always impact sentiment. So while the SEC change is encouraging, it should be considered alongside other factors, not in isolation. Retail traders often react emotionally. When they see a breakout above $2 or a sudden green candle, they feel FOMO, fear of missing out, and jump in too quickly. That's why weekends and low liquidity periods are particularly dangerous. One large order can trigger a price spike followed by a quick sell-off that shakes out inexperienced buyers. This is exactly what we saw recently when XRP moved above 2.05 and then pulled back slightly. The market is testing how confident participants really are. Institutional players, on the other hand, act differently. They have larger capital, access to data, and often trade strategically rather than emotionally. They watch liquidity flows, regulatory changes, and technical levels before committing. When liquidity injections happen, like the $74.6 billion from the Fed repo facility, institutional capital often rotates into crypto selectively. XRP, being one of the top market cap coins, naturally attracts this attention. But institutions are patient. They enter gradually and usually prefer stability over volatility. Understanding this divide helps explain why XRP can sometimes show strong moves, yet fail to sustain them immediately. Retail excitement drives spikes, but long-term moves require institutional support. The recent crossover above the 13 EMA and interaction with the 50 EMA zone is a good sign technically, but for a lasting breakout, we need institutions to confirm the trend by holding key levels and providing real volume. Now let's look at possible scenarios for XRP in the coming days. Scenario 1, continuation breakout. If XRP manages to consistently close above the 50 EMA while Bitcoin remains stable or rises, we could see a move toward $2.20, $2.30 in the short term. Strong volume and positive macro signals would support this scenario. The combination of retail enthusiasm, institutional patience, and reduced regulatory uncertainty could trigger a momentum surge. Scenario 2, pullback before continuation. Markets rarely move in a straight line. Even if XRP is fundamentally strong, a small pullback to 190, 195 is possible. This would shake out weaker hands, allow stronger hands to accumulate, and prepare for a more sustainable upward move. This is a healthy market behavior. Think of it as a reset before the next leg up. Scenario 3, failed breakout. If Bitcoin weakens or macro liquidity shifts elsewhere, XRP could fail to hold its key EMA levels and drop back toward 180 or lower. This is why risk management is crucial. Leverage too high or chasing price after one good day can be very dangerous. History in crypto has shown us countless examples where early optimism quickly turned into panic selling. The key takeaway from market psychology is simple. Observe, don't chase. Let the chart confirm the trend. Let macro conditions support your decision. Pay attention to liquidity, news, and regulatory developments, and always keep your risk under control. By doing this, you can participate in the market without letting emotion dictate your actions. Another psychological factor worth noting is the herd effect. XRP is part of many discussions online and in social media communities. When people see others buying, it can drive temporary spikes, but these are often followed by short-term corrections. A wise trader distinguishes between crowd excitement and structural market strength. The first fades quickly, the second builds over time. First, the technicals. XRP recently broke above the $2 level and managed to close a daily candle above the 13 EMA for the first time in weeks. This is a positive signal, showing that short-term momentum is improving. The interaction with the 50 EMA zone is also critical. Consistent closes above this level could confirm a real breakout, while failure to hold it may indicate a temporary pause or pullback. Technicals alone are not enough to predict price. They are a guide, not a guarantee. Next, the macro picture. Liquidity flows like the $74.6 billion from the Fed repo facility matter because they provide the capital that moves into risk-on assets such as Bitcoin and large-cap altcoins like XRP. Historical patterns also suggest that after gold reaches local highs and cools, capital tends to rotate into crypto, especially Bitcoin. This rotation often benefits XRP because it is one of the largest and most liquid altcoins, ready to absorb institutional interest once Bitcoin establishes strength. Then comes regulation. The SEC shift, with Anti-Crypto Commissioner Caroline Crenshaw leaving, reduces some short-term uncertainty for XRP. This change doesn't remove all risk, but it does improve sentiment. Less regulatory fear means institutions may start participating more actively and retail traders feel more confident. Remember, regulatory developments often drive big moves in crypto, even more than charts or social media hype. Market psychology ties everything together. Retail traders bring energy and volume spikes, but these are often short-lived. Institutional players provide patience, stability, and long-term follow-through. Understanding the behavior of both groups helps us anticipate possible scenarios. Right now, XRP could see one of three outcomes: a continuation breakout, a pullback before resuming upward movement, or a failed breakout if Bitcoin weakens or macro liquidity shifts. Watching key levels, volume, and macro indicators will give you the clues you need to navigate the next moves. Risk management is critical. Crypto markets are volatile, and even positive catalysts do not guarantee gains. Over-leveraging or chasing price action can wipe out accounts quickly. A disciplined approach, dividing capital, waiting for confirmations, and avoiding emotional decisions gives you a much better chance of participating in the market safely. So, what are the key takeaways from today's discussion? XRP breaking above $2 and closing above the 13 EMA is a positive short-term signal. The 50 EMA zone is the next key level to watch. Macro factors, including liquidity flows and Bitcoin strength, will significantly influence XRP's next move. Regulatory shifts, such as the SEC commissioner departure, reduce uncertainty and improve sentiment, but don't eliminate risk. Market psychology matters. Retail enthusiasm can drive short-term spikes, but institutional support is needed for sustained rallies. Risk management and patience are essential. Never chase a breakout without understanding the context. Diversification protects you from unexpected shocks in an unpredictable market. In conclusion, XRP is in a critical decision zone. Positive signals are aligning, but caution is still necessary. Technical confirmation, macro support, and regulatory clarity are all factors that will determine whether this breakout can be sustained. The market is offering opportunities, but those who act recklessly will face losses. The smart approach is to observe, plan, and let the market prove itself before committing heavily.